Stocks recover sharply after an early intraday dip. Financials and IT lead while healthcare and consumer durables sulk. Mid-caps underperform.
The Adani Group, which will infuse 20,000 crores into Ambuja Cements after took over Ambuja and ACC, has set itself a target of becoming the largest and most efficient cement maker in India by 2030.
M&M gains on its plan to sell 30% in its renewables arm. Mahindra sustained to Ontario teachers with a plan to offload another 9.99% by May next year. The move will aid the group's green energy push and value creation.
Cipla sulks after the US FDA makes 3 observations on its Goa unit. HDFC Life gains on receiving the NCLT nod to merge with Exide Life Insurance. And ONGC perks up after the government cuts the windfall tax rate.
Hello and welcome. You're watching us here on Halftime Report. I'm Mangla Malu, with me Ekta Batra as well as Sonia Shenoy. Good afternoon, ladies. It's an interesting first half of trade so far. We saw a fair amount of volatility, and thereafter that dip was bought at higher levels. We have seen recovery, but then again, there is some sort of resistance around that 17,700 odd mark. But bulls won't be complaining with a 90-point uptick on the Nifty, notwithstanding the mid-cap index, which is currently underperforming.
Oh, absolutely. And the stock of the moment undoubtedly is Ambuja Cements, right? 11% higher. So that's the space to definitely focus on. But plenty of other stocks that we're looking at as well. All in all, not too bad, with the Bank Nifty sort of holding forth this afternoon.
Hi, Manglam as well as Sonia. Yes, absolutely. And for M&M, in fact, talking about the auto space, that one is doing fantastically well as well. Top gain on the Nifty at this point in time. Adani Ports following suit with a gain of around 3%. But let's talk about a couple of companies that we have on our radar. Mayur Uniquoters is in focus. The company is a major manufacturer of Rexine PVC coated fabric. To discuss demand and the business outlook, we have with us Suresh Kumar Podar, who is the CMD and CEO of the company, joining in. Mr. Podar, hi, welcome to the show. Your volume growth was fantastically strong in the quarter gone by. It was up around, in double digits, and you are anticipating around 15 to 20% volume growth for the entire fiscal. Just give us a sense in terms of where exactly the demand is coming from. And because of these global recession fears, are you probably thinking that maybe volume growth won't be as robust as anticipated?
So far as automotive is concerned, we are getting good growth in automotive export mainly, and automotive OEM domestic also, because the chip shortage is coming down, so the requirement is increasing. So we expect, as per volume growth, compared to 21-22, we expect in 22-23, 20% growth in automotive, I'm talking. And in 23-24, also 18-19%. And then 24-25, also about 12 to 13%. This is what I'm saying. Whatever has been given to us by auto OEM exports, according to that I'm telling you. And so far as total volume is concerned, this will be from last year, next 3 years, it will be average 14% in volume growth. In totality, 14%. I'm talking.
Sure. So that's 14% overall. And for the automotive sector, you were talking about 20% growth. Actually, yes. For the benefit of our viewers, I just want to say that Mayur Uniquoters does, cater to the automotive industry, where they do supply artificial leather, of course, in cars, buses, trucks, agricultural equipment, etc. But they also use artificial leathers used across the board, right? Whether it's door trims, steering wheel covers, knob covers, roof lining. So a lot of the car is, the kit value perhaps has even gone up. Mr. Podar, correct me if I'm wrong. How much of your total business now comes from automotives? I understand that you've bagged some new clients like Kia as well. And what will the revenue contribution be, say, a year down the line?
You see, 162. You see, if you see the volume, revenue growth, the revenue growth from automotive will be more than 20%, 22 to 23%. And the other, as I told you, 14% average then other areas it will be about 10%.
All right. Mr. Poddar, I just wanted to understand a couple of details from you. You said that Mercedes had increased their offtake from 15 to 20,000 meters per month to about 30,000 meters per month. They wanted to, commit orders of almost 40,000 per month. You had BMW revenues which will accrue in FY24. So I just wanted to understand, with the slowdown that everyone is, witnessing or expecting in the US and Europe, could there be a risk to these volumes?
No, actually, you see, these volumes are from different manufacturers. So long we were supplying to Chrysler only. Now Mercedes has also started 1 year back, and BMW is going to start in the first quarter of next year. And then Ford Motor also, we have got the order that will start in 23. So what I'm trying to say, we are getting orders from different companies and from different models. And in existing Chrysler business also, we have got an approval of 2 more models, which will be in the end of 23-24 and beginning of 24-25. So this will have nothing to do with the USA automotive industry, because we are not increasing the numbers in the same company, but in the different company. And that also we have taken as very conservative figures. According to me, it should be more, but I'm taking conservative figures looking at US economy.
Okay.
Right.
So, as of last quarter, you had managed to pass on over 50% of your raw material or input cost prices that you had seen, the increase that you had seen. Now that we're probably in a better situation, what is the pricing like when it comes to input costs? Do you have to pass on further, or do you think you can probably even pull back a little bit now?
So you see, the input cost has to pass on because the prices are going down. So naturally, now it depends that how much we can get from the customer. Suppose my raw material price is down by, say, 6%. Now it depends. Sometimes you reduce by 6, if raw material 6%, then final price may be 4%. It may be 3%. It may be 5%. But overall, it will be okay.
Can you...
Even if the prices fall down, you see, now with this automotive industry like Mercedes, BMW, Ford, we are talking, their prices are at least 15 to 18% more than Chrysler. So it depends on which company you are supplying and which model you are supplying. The price depends on that.
But the margins for you used to enjoy about 24-25% margins as well, and now that has fallen quite a bit. I understand that there are raw material cost pressures, but since you have new clients on board, not just Mercedes, but you have Kia, Hyundai, etc., on a blended basis, what could the margins be?
You see, margin, I can tell you 1% or 1.5% more. It can be more or less. It is very difficult to predict the exact margin at the moment. It can be 1% minus, it can be 1% plus.
Okay.
Mr. Poddar, near-term demand and revenue questions aside, everyone was worried about what happens to the future of the company, succession, etc., professionalization. So you did mention that you had earlier, hired an R&D expert. You had a CFO, which is a new CFO. You have Mr. Bagaria as well, Arun Bagaria, who's your son-in-law, who's the executive director. And now Manav Poddar, after a long time, who's your son, has come back into the business as well. And in the conference call, you said that he will observe a key area and then you will start giving in the work to him one by one. I just wanted to understand, with a professional coming in, your son-in-law, your son as well, how are these roles going to be defined, and what will the future of the company look like when it comes to management? Who will have what responsibilities and what kind of powers?
You see, that I cannot tell you right now to whom what I have to give. What power I have to give to Arun Bagaria and what power I have to give to my son. That I will tell you in course of time, because He is coming to the factory, he is understanding many things. And I think from next quarter, the responsibility will be given. But although all the responsibility cannot be given at one time, of course, it will be under me. And they will be given particular areas like Arun Bagaria today, he is looking after all India's marketing, Export is looked after by me. I'm in general export and automotive exports. And what I am feeling that to start with automotive, I will give to my son because he is a good planner. And
Mr. Podar?
Here I see much more growth in automotive.
Just a quick last question from my end before we wrap up. This is your succession plan which you have. But do you think that selling out entirely would probably be on the cards for you if in case you do get a buyer?
Get a buyer?
Would you look to probably exit the company entirely? Sell to another company? Monetize your stake?
My stake?
Yes, the promoter stake. Instead of a succession issue, a lot of the companies just look to exit also.
You see,
Promoters look to exit, yeah.
That I can't tell you right now. It's not. But of course, when they will take over, definitely pass on to them. This is quite understandable.
Okay, we take that point, Mr. Podar. Thank you so much for joining in, giving us the long-term view of the company as well as the short-term. The near-term looks good despite the weaknesses that we're seeing, and that's primarily because of the visibility that you have from the clients that you are in talks with. That's about Mayur Uniquoters. Today is absolutely flat, but the last few trading sessions, we've seen a big move on that stock itself as concerns around the auto sector ease. There you have it, 1 month up around 11% odd. Take a short break, come back, and we will focus on some stocks which are in the news.
Welcome back. Well, it seems as though the mid-caps are recovering a little bit. So the mid-cap index as a whole has completely flattened out and we have an advanced decline ratio which stands at around 1:1 as well. So on the Bombay Stock Exchange, over 1,800 stocks advancing and around 1,800 stocks declining at this point in time. But let's talk about the top gain on the Nifty today. M&M is gaining in trade today on its plan to sell 30% in its renewables arm. Sonia, tell us more. What does it mean?
So this is positive for M&M, right? The fact that they are monetizing stake in their renewable energy arm, this is something that they had planned way back in 2020, where they spoke about monetizing stake in several of their subsidiaries in order to unlock value for shareholders. Now, they will be selling 30% stake for 2371 crores. They will then set up an InvIT in order to list the renewable energy assets. And the money that they raise, they will deploy the funds back into the business and into the InvIT over the next 7 years. So they're planning to unlock value for shareholders, eventually list part of this business and looking to build a very strong renewable energy business. Currently, they have an operational capacity of 1.54 gigawatts. Apart from that, the core business, which is the automobile business, is also growing at a very fast pace. In fact, CLSA put out a note where they have raised, they have a target price of 1,567, which is in any case well above the current market price. The title of that report is M&M is now in a golden period because of how well their products are doing. Also, because of the fall that we've seen in raw material costs, the full positive impact on margins is expected Q3 onwards. And they have very strong bookings. Currently, they're sitting on bookings of 240,000 units of new SUVs. And there are multiple new SUVs that are planned over the next 12 months. There's the new XUV 300, there's the Bolero refresh, there's the 5-door Thar, and of course, the new electric vehicle as well. So betting big on M&M over the longer term.
All right, so that's about the reason why M&M is doing well. In fact, it has been the top performing Nifty stock all of this year as well. But let's move on to the banking space now. CLSA has written a note on SBI as well as Axis Bank. Abhishek, what does the note say and what are the targets that they have?
Well, to begin with, CLSA had its financial conference. So over there, SBI has come in, wherein, CLSA has a buy rating with a target price of 680 per share from the earlier target price of 660 per share. So in their conference, SBI's management did mention that the growth and margins are seeing an improvement. So management has indicated that loan at the system level is picked up, and they are seeing capex-based demand returning to them. So they also expect the net interest margin on a gross basis to improve by 20-25 basis point, and on a net basis by about 15 basis point. They have not taken any exposure to the Indian corporate on the overseas business that they have, and there is no urgency in terms of raising funds or capital in the near term. Axis Bank was also at the conference. So over there, CLSA has a buy rating. They have increased the target price to 1,050 per share from 975 that they had earlier. Over there, they say that the valuations are undemanding. Management sees a strong sector outlook, especially with respect to growth and margins improvement that they are expecting over the next few quarters. Axis expects the Citibank merger to be completed by 4Q of FY23. So it also expects, robust overall growth, and is choosing net interest margin or profitability over growth over there, especially in the corporate segment. So key outlook that the bank has given in the conference is that they are targeting an ROE of about 15.5% to 16%. Net interest margin should be at about 3.8%, and they expect cost to asset ratio in the medium term to be around 2% level. Back to you.
Okay, all right, Abhishek. Thanks very much for that. So those are some takeaways coming in on the big two banks, State Bank of India as well as Axis. But let's move on to a CNBC-TV18 update with regards to McLeod Russel. Carbon Resources Private, in fact, is looking to take over McLeod Russel and has submitted a letter of intent to the lenders, which CNBC-TV18 has accessed. Vivek Iyer has the details on this story. Vivek, go ahead.
Well, a very interesting deal seems to be brewing as far as the Indian tea market is concerned. Now, what we are looking at is the fact that Carbon Resources Private Limited, now this particular family and this is owned by the Jalan family, and the group is mainly involved in CPC generation as well as produces raw materials as far as the steel and mining industry is concerned. What we understand is that this particular group is looking to diversify into an unrelated business category and has gone ahead and submitted a letter of intent to the lenders of McLeod Russel. Now, what we understand is that we've seen a copy of the letter. We understand that the purpose of the letter is to provide a holistic offer to lenders for the debt resolution of the entire group debt that McLeod Russel has. We understand that they've offered almost 1245 crores of debt out of a total of 1650 crore of outstanding debt. We also understand that they look to fund the deal via an equity of 300 crores and issuance of new debt of close to 950 crore. Now, remember, on Friday, in the NSE bulk deal data, we actually saw 49.5 lakh shares actually being bought from the open market by Carbon Resources. And we also understand that there was a minor deal made on the BSE exchange as well. So overall, almost 5.3% stake being acquired from the open market by Carbon Resources. And we understand that this was mainly to signal a strong intent by this particular group company to actually show, the seriousness to which they are approaching McLeod Russel. Now, we actually reached out to McLeod Russel. We reached out to Carbon Resources. We also reached out to the lenders. We got a response from Carbon Resources. They have confirmed the CNBC TV18 exclusive. They said that we confirmed that we have presented a non-binding LOI to the lenders of MRIL, and for the last couple of trading sessions, the stock has been on the upper circuit.
Okay, and look at where it is today, up 20%. Thanks a lot, Vivek, for that. That's a CNBC TV18 exclusive. Let's slip into a short break. Up next, we'll focus on Escorts Kubota. That stock is up 9%. It's a fresh 52-week high. Stay tuned for more.
Well, even as the mid-cap index is absolutely flat, we do have a lot of mid-caps which are spiking as we speak currently. We have Fortis Healthcare, actually. That's the one that should come up for you, up almost 8% from the lows, and most of the gains have come by in just the last few minutes. A vertical spike is what we've seen out there. Yes.
We do have the Supreme Court hearing, or maybe the conclusion, which was expected this month, according to the management. So just want to point out that on Fortis, so maybe the street is anticipating something there.
perhaps something is happening out there, but there's also a lot happening in campus activewear, which is up 9%. We'll talk about the footwear space in just a bit, but Sonia, we do have a bunch of other stocks as well that you're watching out for. In fact, Escorts Kubota, that's at a fresh high.
So, a couple of days ago, Escorts Kubota announced that they are amalgamating two of their JV companies, the loss-making JVs, but they're putting it together in order to come out with a simpler, cleaner organizational structure. Now, today, the management, when we spoke to them, gave us information about how this amalgamated JV is going to move forward, and a lot of positive commentary over there. They said that the JV, which is loss-making, will be profitable by FY24 itself. So, there's a concrete timeline by when the JV will be profitable. They will come out with a midterm business plan in November this year. And the big positive trigger for them now is localization of engine production. Now, localization of engine production will happen over the next 2 years, and that will bring down costs for them in a big way. The costs will go down by 25 to 30%. And just imagine the kind of operational efficiencies that will improve once this takes place. Of course, margins will improve as well. And apart from that as well, they speak about how September and October will be bumper months for the tractor industry, and because of the amalgamation, the volumes are expected to go up in a big way. So now Kubota has about 53% stake in Escorts Kubota in the JV. And generally when companies come on, global companies come on board, they look very quickly to correct the the wrongs perhaps. And now with this localization of engine production, they're planning to bring down their costs by 25 to 30% in the next 2 years itself. And that's something that perhaps the street is pricing in right now. In fact, we had a chance to speak to the management, so let's listen in to what they had to say.
Both the JVs, I think, we expect, AKI, which is a manufacturing JVs, as you know, it started its production only in September 20. So last year was the first full year of operation, but the capacity utilization there was still very, very low. So we expect the capacity utilization will actually start moving up now. This year also is going up, and next year with the exports also increasing, we expect this JV actually will do well. So by FY24, we expect this JV should be able to be in black. KI, which is the sales company, is already making, it's already profitable venture, and we expect the profit also should start moving up there in another year or 2 years' time. Yeah, so that's a part of our midterm business plan, which we plan to unveil sometime in the middle of November. So yes, engine localization is very much a part of our plan now, because that will be the major cost-saving initiative, which we'll really undertake to make the JVs profitable.
Okay, so it seems as though definitely auto is one theme in today's trading session along with cement. We need to take a short break, but on the other side, we'll get you an exclusive conversation with Ramdev Agarwal, Chairman and co-founder, Motilal Oswal Financial Services. Stay tuned.
Welcome back to Halftime Report on CNBC-TV18. We have a very special guest joining us now. Ramdev Agarwal, the chairman and co-founder at Motilal Oswal Financial Services, is joining in from the sidelines of the Motilal Oswal 18th Annual Global Investor Conference. Ramdev, good afternoon and thanks for being with us. I can see the frenetic activity behind you, and it's a very... I think it just showcases the kind of euphoria that this market is in right now. The Nifty is up, 2% this year, while most global peers are down about 18-20%. Is this enthusiasm something that perhaps could continue through the course of the year? And what has the feedback been so far from the conference?
Good afternoon. After 2 years, we are doing this conference in physical form, so everybody is very excited. And a lot of people have come from Hong Kong, Singapore, not so much of participation from US and London this time, but participation is very intense. And one of the things I'm hearing is that India's story is different. What you are saying about outperformance, that everybody is noticing, and everybody is trying to find macro backdrop for this outperformance and how it is going to happen. So I think everybody is excited, and when we meet the companies, we just met Mahindra's, and we are just seeing a few more banks' presentation and all. Everybody seems to be excited about what's happening on the ground. Demand situation is good. In fact, if anything, they are not able to meet the demand. So I think many more companies, there are 200 companies participating with about 12,000 meetings. So I think it's going to be a big day, a big 2 days tomorrow. And let's see, what is the feedback from them.
Right.
Ramdev, hi, welcome to the show. You were talking about the outperformance that India is seeing, but at the same time, the world is expecting a recession probably in the second half of this year globally. In that context, how would you be placed probably on the IT space? What are investors' concerns when it comes to IT? Do you think that would probably be a contra investment at this point?
Yeah, so IT has become the second largest, market cap category in terms of corporate profits, the aggregate corporate profit pool after banks. The second largest is IT. What used to be about a percentage in 2000, now it's about 23-24%. So you can't take away the size of the profits and the quality of the profits. There is hardly any company in the tech which is loss making. Every company is profit making. So India has right to win, and it's going to be a big story in the years ahead. But what has happened is that on the eve of COVID and during COVID, the stocks got re-rated big time, and right now we are seeing the churn. The private banks are on the rise. So to buy that, from where will the money come? So clearly there is a churn here, and I think I don't know when the correction will be over, but at some point of time in next 6 months or so, as the correction gets over, I think it is going to throw one of the biggest opportunity to invest as we go forward. But maybe some more corrections are ahead, because this fear of recession is becoming louder, and at some point of time maybe some actual recession will come, and at that point of time I think psychologically IT companies will be impacted most, because the tech companies in US will have the largest impact. So I think we are in a very interesting situation of this large industry group. The corporate performance will be good, but the P multiples derating is happening continuously and may continue for some more time.
Right, take that point, Ramdev. P derating of IT may continue even as the sector does well. But I remember clearly, you said that the FIs were getting, when they were selling lock, stock and barrel, you said that they were getting an easy exit from our market, but the entry back will not be easy. We've seen that in August, FIs bought over 20,000 crores and the Nifty has rallied from about 15,200 all the way to upwards of, or just shy of that 17,500 mark as we speak, a little around 17,700. What are your thoughts on the flows coming into India from the FIs now that everyone is looking at India as the only place of outperformance in the world?
Yeah, so see, today India is about 3.5% of the world in terms of market cap. We are about about $100 trillion global market cap. We are about 3.5%, and in next 3, 4, 5 years, we are very. The way the world is today, I think India's gain in market cap share is going to be quite rapid. So we are heading towards in next decade at least to about 5% of the global market cap. I believe the institutional investors have allocated about less than 1% of their corpus into India. Now the question with them is that they are finding India expensive, but that's how India is a unique story. It has its own momentum in terms of what is happening right now. You cannot price every country same. These two countries, like two companies are different like that, two countries are different. So at some point of time, they'll come to realize that India has its own unique story, its own size, its own momentum. So then I hope they'll get reconciled and India gets its a fair allocation from FIs in the years to come. So I remain positive, optimistic that maybe with a little gap, FIs will definitely stop selling, but they might, as the earnings momentum is maintained, I think they would come to buy here and build the position of their portfolio.
Okay, you briefly mentioned that you have over 200 companies, I think, attending the conference, and I think Dr. Anish Shah of M&M just spoke a while back. What was the key takeaway? That is one stock that has been on a tear. Anything that stood out for you?
Yeah, I attended the entire presentation. So the company is very in a determined way. They are cleaning up all the portfolios of the legacy businesses and building up on the EV cycle. So it looks very exciting, and the current CEO is completely on top of it. So it's, I mean, they're not able to produce enough to meet the market demand. This is what the market looks for. 25, 30, 40% growth, at least in next 4-5 quarters. So that's what I think. There is a growth bonanza here, and I think market will remain. I would think at 18-19 P multiple. I think it looks a good stock, good story to pursue for next 2-3 years.
Okay, that's on autos, Ramdev. But the other big theme that people can't stop discussing now is cement. I mean, if we were discussing this in 2020, 2021, we wouldn't really be discussing as much consolidation, which could be, coming up in the cement space. What are people talking about in cement now? Would they buy it as simply because of the capex cycle picking up, or the fact that there could be, buyers coming through for smaller cement companies? What's the theme there?
Yeah, I think the biggest change which has happened in last few months is the entry of Adani into the cement, and their ambitious plans about it. They would be having better understanding of the kind of a demand profile which is going to build up in the economy. And I think one lever, where the GST of 28% for the one of the most primary industrial commodity. Earlier also it was being discussed that it could come down to 18%, but for revenue considerations it never happened. So that could be one more trigger. But I think the demand scenario which will build up over the period of time, and the kind of consolidation they are talking about, that makes it very interesting. One number I was saying was China last year consumed about 2 billion tons of cement. We are still at about 300-400 million tons. So I think the scope for this industry to grow and generate a lot of cash in the years ahead is there. Now the issue is the kind of change this industry is seeing in terms of the imagination that the kind of multiples this can attract has been quite astonishing.
Right. Ramdev, if one's thesis is that India will outperform going forward, both as a market and as a GDP, and assuming that, more than 70% of our GDP continues to be consumption driven, how do you play that space? I mean, at what pace do you think, what segments of the consumer, assets in the stock market will grow, and what would your positioning there be?
Yeah, so services altogether have been very large part of Indian economy, and that's where I think we have an edge, global edge we have, right to win we have. So I have been big fan of IT also. I'm an Indian IT. I still remain so. Your financial services, your banks, asset management companies, your brokerage companies, your insurance companies, general as well as life. So everywhere the growth potential is very high, and as the aspiration to become developed economy, as propounded by our finance minister, takes momentum, I think the outlook for a lot of industries which are connected with the economic growth, they will also perk up, and the opportunities will come. Opportunities will come in, say, automotive. Opportunities will come in a lot of other consumer services like real estate. That has been in the dumps for last 12 years, and there I think the demand has been very robust across the country, except for very, very expensive flats. I believe up to 5 crores, 10 crore flats, the demands have been very, very good. So I think you have to, first thing is to remain invested in equities. Second is to find stock ideas or bargains at any given point of time. India is full of bargains, full of ideas, in the sense that we have 2,000-3,000 companies listed. For everything you will find an idea. So there is no dearth of ideas if you have belief that India can keep growing at 7% for next 3-4 years.
Oh, absolutely. And the market is listening to you, Ramdev. The Sensex is up about 300 points right now. But the other big corporate that's speaking at your conference, and I'm very keen to know the takeaways, is Adani Transmission. There is so much opportunity here as well, right? I mean, Adani Transmission in their own PPT, in their presentation, said that there is $30 billion worth of projects for private players to capitalize on. What do you see as the big story here? Because some of these stocks have rallied quite a bit already.
Yeah, so I think that presentation is in the afternoon post lunch. So everybody looking forward to that Mr. Saldana's presentation. Let's see what comes out. I'm also as keen to see the presentation. So it's one of the observation about the industry is that it's a return capped kind of industry at about 12% or so. So we have to figure out how exactly they are going to deploy a lot of capital so that the growth is being this growth hungry market. They are not focusing so much on the ROE, they are focusing on the growth itself. So I think we have to listen to them to figure out what kind of capital injection they can do in next decade or so.
Ramdev, what are investors saying as possibly the biggest risk to the Indian markets now?
It's just about few hours. I think in one-on-one meetings which are going to happen through the day, and a lot of people, they don't want to speak out here in public in terms of what are the concerns. They are just stunned by the level of outperformance and the way FIs sold out. And I spoke to one or two FIs. They said they are trying to impress upon them that that India's story is different. Don't compare with other emerging markets, and hence their pessimism is unwarranted. That's what they are trying to say. They're all Indians. So I think very specific. I think the only concern I see is the valuation vis-a-vis the peer emerging markets right now. And we are also defying the US, the broad trend in the global equities, where like other day, last week, we saw about 5% decline in Nasdaq and all, and we were literally flat. So that kind of strength in the Indian stock market, is it warranted? Is it overdone? Only time will tell.
Right, you take that point, only time will tell. But you know, one thing is for sure, Ramdev, and we spoke about this with the management of Indian as well. You are doing this after 2 years in, physically, the conference, and I presume you've paid a lot for the hotel where you are, doing this conference itself. So are you thinking of, recovering this cost by investing in the hotel segment itself, hotel sector?
These are two different, verticals. I mean, there is a sell side which does the conference and they pay for it. This hotel has never been cheap in the sense that earlier also at one point of time for 2 days conference, we used to pay for 4 days. Now I think the rates are up, but I think we are paying for 3 days or so. So that's fine. I think it's a happy situation to be meeting all of them in person. And yes, there is going to be cost, but that's fine.
Absolutely. I think this was what the industry was craving for over the last 2 to 3 years, right? Meeting people physically, getting back to those corporate travel and meetings, and it's come back in a big way. So great to hear that. Ramdev, all the best with the conference. Thank you so much for joining us. It's quite noisy out there. So thanks for taking the time out. And amidst all the chaos, we hope to hear from you very soon on the key takeaways from that conference.
Sure. Thank you.
Okay, thanks a lot. That's Ramdev Agarwal of Motilal Oswal. They say that most participants have come through from Asia, from Singapore, from Hong Kong, and there is a lot of enthusiasm about the Indian markets at the moment. Well, we'll keep getting you takeaways from that Global Investor Conference. A lot of big voices there speaking, especially names like Anish Shah of M&M, as well as the head of Adani Transmission. So more on that in a bit. We'll also get a quick break in. On the other side of the break, Manisha Gupta will join in. She has Rajiv Budharaja, who is the Director General of the Automotive Tyre Manufacturers Association. Do stay tuned.
Welcome back to Halftime Report. Joining us on the show now is Rajiv Budraja. He's Director General at All India Automotive Tire Manufacturing Association. Rajiv, hi, good to have you. I want to start with the rubber prices, which have continued to decline. If you look at the last couple of months, it has been a constant decline every single month, from 170 in the month of July to 160 in the month of August, and 150 rupees per kg is how we are dealing with in the month of September. What do you give to this decline in prices?
Well, it's a result of both the international trends as well as the situation as it prevails in the domestic market. As you know, overall, globally, the demand has been rather timid because of China not really, coming back into its full form. Overall, we are, just at the beginning of the peak season. So in terms of availability, yes, the situation has improved. But on the demand side, there are still concerns, as far as tire industry is concerned, because we've seen that other than UVs and the tractors, all other categories of OEM production, it is still not, come up to the levels as was expected. So this quarter has been rather, timid as far as OE offtake and OE demand is concerned. Replacement also hasn't, picked up to the levels that was expected. We do hope that, the next quarter with the festival season setting in will bring about a change. But until then, yes, rubber is under pressure and stress, both domestically and globally.
Well, yes, if you look at the last 1 month, it has been a 10% decline for the global rubber prices as well. So we seem to be moving in tandem with that. But as you said, the demand is not so strong as we enter into the month of October, and this is a Diwali month as well. Do you see demand uptick coming in? Is that demand visible into the markets right now?
Yes, there is hope and optimism. I think we are definitely going to be doing better than last year, which of course has a base, is not very representative. Last year wasn't great, in that sense of the word. But I think once the turnaround takes place, the next quarter, which is the last quarter, traditionally always good from the auto sector point of view as well as the tire industry, I think we would be over the hill. But this quarter, July, September, has been a period of somewhat of, not coming up to the expected levels.
Rajiv, a difficult one, but are you putting any number in sense of demand growth when we look at on a quarter-on-quarter basis or even year-on-year basis when you look at the last quarter of this year?
Well, we should definitely be, in a decent single-digit demand growth. Although on the export side, we've done exceptionally well, as you know. FY22 closed with a growth of 50% on the tire side. First quarter, we've grown by 30%, over the previous quarter last year, as far as tire exports are concerned. So I think exports would continue to have a good double-digit run. And on the domestic front, combining both the OEM and the replacement market together, we should be in good single-digit growth levels. Yes.
How also are you looking at the rubber prices then? I mean, do you see a bottom anytime near? Because, the various reports or the conversations within the industry do suggest that you could be looking at further decline in prices here.
Well, I wouldn't like to comment on the price trends, going forward. But I think once the tire demand picks up, and exports are as it is doing well, I think on the rubber side also, things should be looking up going forward. Yes.
With these current prices, Rajiv, what kind of imports are we looking at and what prices? Because that the current scenario in sense of rubber prices, at least as a raw material, looks like a positive for the industry.
Well, it is a positive. All other raw materials are also, on the softer side now, having touched historic peak levels, if one may say. Imports, as you know, are invariably there to bridge the gap between domestic availability and demand. So to that extent, yes, imports will take place. But the first priority and the first sort of offtake for the domestic industry is always and invariably from local sources. So to that extent, I think there shouldn't be any concern on the rubber front.
Okay, all right, Manisha, thanks very much for joining in and speaking to us. Well, it's definitely a lot about the auto ancillary space, since the discussion just a couple with Manisha was on the entire rubber space. But nonetheless, just want to point out that a couple of stocks are also losing a little bit of ground. So while the momentum is definitely on the upside, we have the mid-cap index, which has also moved into the green at this point. Stocks such as Cipla, now your top loser on the Nifty. So that stock is down around 1.7%, reacting to those observations which have been issued to the Goa facility, and something like Britannia from the FMCG space sulking a bit as well. That stock down around 1.5%. Need to wrap up on Halftime Report. Business Lunch up